So I wanted to shoot a video today to address something that is probably confusing a lot of people out there right now. So this is going out both to my real estate friends and my non-real estate friends, because I think there's a lot of misunderstanding what is coming when it comes to how rates work. So let me just give you a quick backstory to help you understand what the federal funds rate is. That which is the rate that the feds control. Federal funds rate is the number one tool that the federal government has to help control the economy and especially inflation. Well, inflation, as you probably are well aware of it, is out of control. They should lower the federal funds rate down to effectively zero. During COVID, they did that to help stimulate the economy, and they also pumped a ton of money into the economy. And the combination of them lowering the interest rates and pumping money into the economy caused not just inflation, but hyperinflation. And if you try to buy a car, a boat, an RV, put fuel in your car, buy steaks at the grocery store, or anything, you're well aware that inflation's out of control. So the government is, in order to control inflation, they have to raise federal funds rate, which is a rate that banks borrow money out of overnight, blah, blah, blah. And influence is in rates in a variety of things: credit card rates, auto rates, mortgage rates, all kinds of different things. And so when inflation went out of control, they realized, okay, we've got to increase the rate to help curb inflation. And so the expectation as of a week ago was that they were going to raise the federal funds rate about a half a point. That was the expectation literally a week ago yesterday. Then the news came out on Friday that inflation actually increased month over month, which was not what they were expecting. As a result, the feds realized we need to not only raise the federal funds rate half a point, we need to raise it 3/4 of a point. And that kind of went down on Friday, which caused a big jump in mortgage rates, you see. Mortgage rates actually move in anticipation of what the Fed is going to do. They don't move when the Fed does something. They move in anticipation of what the Fed is going to do. So when the anticipation changed from the Fed's raising rates a half a point to the Fed's raising rates 3/4 of a point, that wasn't what was expected. Therefore, mortgage rates increased to compensate for the new expectation that they were going to raise rates even higher than what was expected. Well, even as of yesterday or even this morning, the thought started to creep into people's mind that they could even raise rates a full point. So there was even a little bit more uptick in mortgage rates on Monday and Tuesday. Well, today the news came out and the Fed ended up raising rates 3/4 of a point. Well, guess what? Mortgage rates did not go up. Everybody assumes mortgage rates go up when the Fed raises rates. Not exactly. In fact, mortgage rates went down 1/4 point today. Well, today it's actually lower. Go figure, all right? The media is telling you the Fed raises rates 3/4 of a point today. A lot of you agents and a lot of you home buyers and sellers are thinking, oh crap, mortgage rates are just going to go up 3/4 of a point. No, they actually went down 1/4 of a point. So I want to make sure, one, if you're an agent and you're part of a team or you're part of a brokerage, your brokerage or your team leader should be explaining this to you. And if you're buying or selling a home, hopefully you have an agent who's helping to explain this to you, because you got to cut through the noise that the media is putting out there and cut through some of the confusion that exists in the market and understand federal funds rates and mortgage rates, two different things. Is there an influence between the two? For sure. But just because the Fed raises rates doesn't mean mortgage rates are going to go up. In fact, there's something called a terminal Fed funds rate, which is a termination of where they believe the rate increases are going to go to. Well, guess what? They expect the Feds to raise rates another 2+% in the coming months. The projection is between now, after this third quarter, a point rate or 3/4 a point raise, and by next February, that will see the federal funds rate, which is now at 2.25. They expect that rate is going to end up in the high 4s, 5s, potentially low 5s. But here's the thing. That is already the expectation. So mortgage rates have already adjusted in anticipation of what the Fed is going to do. So if they end up going a little bit lower than that, you'll see mortgage rates pull back to actually get lower and more attractive. If they end up going higher than high 4s, low 5s on the federal funds rate, you'll actually see mortgage rates increase. So pay attention to that. Actually, I have a really cool tool that I found that I'll show you what the projections are. So you can really keep tabs on this stuff and really know what's going on. Not what the media is reporting, because what smart people know is you buy the rumor, you sell the news. Well, we knew the rumor was what the Fed was going to raise rates 3/4 of a point today. We know that the Fed is projected to raise those rates up to close to 5% and over the next year. So we already know that. That's a rumor. We already know that. But here's the problem. It's most people that are not paying attention to the rumor. They're just paying attention to the headlines. So don't be the person paying attention to the headlines. Get ahead of things. Make sure you have somebody on your side. So if your team leader, your broker is not teaching you these things, hit me up. If you want to join our team, hit me up. We're looking for some amazing team members. Our team is putting properties under contract still. Deals are still happening. Don't be part of a team or brokerage where they're not teaching you this stuff and they're telling you the world is ending. Don't be a part of that. The market doesn't stop when these things happen. Things will still happen. Make sure you have somebody on your side who's keeping you educated and you know what's going on. Hopefully this helps clear up any confusion. I'll throw out the link to that tool down below. And if there's anything that I can ever do to help you, shoot me a DM. Happy to help out. Have a good one.